So now we are moving further for our technical session number 3. Financial inclusion and literacy for women. In this session, we have Ms. Sushmita Phukan, GMRBI, Ms. Seema Singh, Chief Human Resource Officer and CFO, IPPB, Professor Seema Singh, Professor of Economics, Delhi Technical University, Ms. Namita Vikas, Founder and MD, and the session chair, Shri Manoj Pandey Saab, Joint Secretary, MCA, and CEO, IEPF. May I request you all to kindly join on the dais? Namita ji, please. I am now handing over to Dr. Naveen Sirohi, Associate Professor and Moderator of this session. Please.
Thanks, Lataji. Thank you very much. So, very good afternoon, friends. Last technical session of the day, post-lunch. We'll try to keep it relevant, engaging, and precise. So, it's a great privilege to have a wonderful panel with us. In addition to the panelists sitting on the dais, we also have Ms. Sushmita Phukan, General Manager from RBI, who is joining us virtually. So, to begin the proceedings, I would first like to welcome the panelists. To my left is Manoj Pandey sir. He is IRS Officer, Joint Secretary, Ministry of Corporate Affairs, CEO of Investor Education and Protection Fund Authority, and former DG IICA. We welcome you, sir. To sir's left is Ms. Namita Vikas. We all have already heard her in the earlier session. She is the founder and MD of Optus ESG and a former banker and 3 decades of experience across banking, financial inclusion, sustainable finance. We welcome Ms. Sushmita Phukanji, General Manager from Reserve Bank of India. She is from the Financial Inclusion and Development Department, she has joined us virtually through WebEx. She's with us. To the extreme left is Ms. Seema Singh. Ma'am represents India Post Payments Bank. She is the CHRO and CFO. So welcome, ma'am. To my right is Professor Seema Singh. She is the Professor of Economics at Delhi Technical University. So this is the panel consisting of regulators, practitioners, and academicians and researchers, both. And the topic is very pertinent. You know, it is said that if you educate and empower a male member, you end up empowering an individual. But if you educate and empower a female, a woman, you end up empowering the complete family, the full household. And that's make this topic of today very important, targeting women empowerment, and especially the financial empowerment. And the two aspects that we are going to focus today are financial inclusion and financial education. So to start the proceedings now, I would request Manoj Pandey sir as the chair of the session for his special address. Over to you, sir.
I'll be rather brief. Good afternoon. Holding the audience after lunch break is always very difficult. So let me be very brief, and then I think the other co-panelists would be discussing this subject. Somehow I feel that the topic itself could have been slightly different. It could have been financial inclusion and education simply. Why? Because the two panels which I can see, the panel which was before me, it was all women talking about ESG and CSR. And this panel also, we all have women. So what we are talking about, is it women empowerment? No, they do not require any literacy, do not require any empowerment. They are already empowered. What actually we are lacking is financial education, adequacy of financial inclusion and education in the country as such. It's gender neutral for India or for any developing country. Naveen rightly said that if you educate a male member, then you are basically educating an individual, pointing out that it's individual centric. When you are educating a woman, probably the children are also taught and the entire family is taught. I'll give the two examples which two or three examples I'll give, and that I think will give some insight about Indian households. These are real examples. We have a maid. We give her salary and she invests. She invests not in a financial product because she is not aware of the financial product. What she did, and we were also surprised, she collected all the cash, she didn't open a bank account, accumulated salary. What she did, she had a very good business acumen, and she bought a car and engaged that car with Uber. The male member of her family is not aware that what business acumen is and what are the financial products. That, in fact, her savings could have been channelized into a bank account or could be a better product. But she invested on her own. In fact, as per her business acumen, but she has done quite well. In a sense, she is earning money now out of that capital. Second example, and all male members, I think, would also agree here who are in the audience, that many of us would not be aware of the sophisticated financial products which Ms. Namita would be aware. So there is a need to make the entire population aware of the sophisticated financial products, because it's agnostic. The need for a better investment, need for a financial literacy, I'm not talking about financial inclusion as such, is gender neutral, is agnostic, because you have to have that kind of knowledge. You see Indian Post Payment Bank, which is being the CFO, Ms. Seema Singh, would be also talking about these financial inclusion programs of IPPB and financial literacy programs which they are running all over the country. Similarly, I think from Professor Economics, from Delhi Technological University. She might be talking about the need for investments in the classes. And it's a male-female both. And Namita, we have heard in last session about ESG and niceties of ESG and CSR. What exactly is the problem? The problem is, if you see the national NCFE studies, that we have only 27-28% people who are financially literate in the country. So it's a low population, and we have to take this message forward, take this stride forward to not only to rural areas, to semi-urban areas, but also to the metropolitan and urban areas. In the pockets, we have to first bring everybody into a fold of financial inclusion, and then we have to educate them, and then make them aware of the products available. So when I give the example of my, in fact, household worker who is with us, at the same time, my wife is also doing something. Like me, she is also not aware of the financial products which are available. So I'm not saying that I would also be aware of all the derivative products and all the sophisticated option and put options which are there in the market. Maybe we are aware of LICs, maybe say IVPs or Kishan Vikas Patra kind of instruments or FDs. Have we reached that stage where we should talk also about derivative instruments or the sophisticated equity instruments? The answer could be, if we get a study, out of those 27%, it will be quite low. So if a country of 130 crore population odd, if we have to take the developmental agenda far, we have to now not only financial inclusion, but also talk about these products. We all are aware, and we shouldn't, to this audience, I need not talk, I need not communicate that what UN agenda is, what Indian Constitution talks about. You all know that even there is a sustainable SDG agenda, SDG points. Majority of the points are also related to financial inclusion, financial literacy, and women. Similarly, our Indian constitutional framework itself provides a framework for gender neutrality and for women empowerment. What exactly World Bank or OECD would talk about is the need for a financial inclusion through women, because it's important to educate them to make a household as a unit, and further household as a unit can go and make a social impact and then have impact at the level of the country and ultimately the world. And all, in fact, men and women have to be financially empowered. We are saying financially literate, not financially educated. Education is important, not only literacy. Where do we stand now? Suppose we are developing countries, also a developed country. We take a parameter that we are a developing country. What is happening in the developed country? If we say International Network on Financial Education of OECD has given a study. Now in UK, it's a fairly developed country, developing since the industrial revolution was there in 18th century. Only 49% of the women are aware of compound interest. Now, it's a simple study which they have carried out. Compounding would mean whether PPF should be important or a bank account, simple bank account is important. In Poland, about 60% of women do not know that high investments are accompanied by high risk against a set of people. So these are studies which have been carried out. And then the policy guidelines which have been given, that financial education initiatives for women and girls are necessary. I'm again saying this particular topic has more to do with financial inclusion and financial education in general rather than to talk about women. Only important point is that if you take it through women, then maybe the entire household becomes empowered. And that's very, very important. If we see that where we are lacking, maybe that we have progressed a lot since 2014, and there is a survey report of NCAP which talks about different figures. But in 2018-19, when this survey was carried out, it was said 27% of females do not maintain a budget for household expenses. That applies to male population also. But this is the statistics which were carried out to just find out that how to empower the household. 34% females are not responsible for managing household finances. That is more to do with maybe the employment and maybe the workforce disparity in the family. In many cases, if you see that even if men and women are working, the women would be saying, this part you would look at, I will not look at the investment side. I'm not aware what are these NSCs and this is my income. I am empowering you to do it rather than reverse which is happening. Okay, the male is empowering a female and saying, you do investments, this is my income. In very few cases it might be happening. Maybe the professors who are working in IICA might be happening because they would be in knowledge of the sophisticated instruments or in this panel. Not everywhere. Now this bias has to change. 64% females are not able to meet living costs without borrowing. And although only 5%, as against 49%, have the knowledge of compound interest in India. That has also to do with the education part. And here, all the institutions combined together have to contribute because we have to take this agenda forward. Now, what government has done so far, everybody is aware. The Department of Financial Services ran various schemes and is running various schemes, and Pradhan Mantri Jan Dhan Yojana, Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Suraksha Bima Yojana, Atal Pension Yojana, Pradhan Mantri Mudra Yojana, Stand Up India, Rashtriya Mahila Kosh, so and so forth. Number of programs have been conducted, and women participation at the micro enterprise level also is ranging between 35 to 37%. Even Ministry of Rural Development is implementing National Rural Livelihood Mission scheme. Then there is a Deen Dayal Upadhyaya Gramin Kaushalya Yojana. All have a special focus on women. Our cities programs which are being conducted. What RBI, I think General Manager RBI is also on the Webex call. RBI National Strategy for Financial Inclusion, in fact I will be quoting a paragraph from there, that there has been growing evidence on how financial inclusion has a multiplier effect in boosting overall economic impact, reducing poverty and economic inequality at national level. Financial inclusion of women is particularly important for gender equality and women's economic empowerment. Now let me bring the role of not only IICA here, but also IPFA. See, IICA has a big role to play in a sense there are schools, and they should now take this agenda forward because the School of Finance or the School of Business Environment, whichever school adopts it, that how to collaborate with different institutions. For a nation development, it's required that everybody is under fold of financial inclusion. If women are quickly brought, that would be better for the society and the nation as such, because then the entire household, because she would be teaching her children also. This is the right kind of investment, because by and large, by nature of, I am sorry to say, the male population, they tend to be ignorant of the need of the children at the initial stage. How to educate, what to educate. Maybe I'm not saying some of them would be responsible enough to do that, but not always. It's all becomes women-centric, so it's very important. So IICA may think about it. The IPFA, Investor Education Protection Funds Authority, we are partnering with India Post Payment Bank also, which Madam Seema would be aware. Our ED from RBI is, we have EDs from RBI and SEBI also on our board. What exactly we are doing? We are partnering with different organizations, going to semi-urban areas, going to rural areas, and also teaching them. So the focus there also can be towards female and female population in the rural areas particularly, because the example which I gave is a live example, that they have a cash. I used to ask my household worker, how much cash did you have at your home? I'm not giving her that much cash that she can 1 month salary, she can buy a car. She said, I had 4 lakh rupees. I said, where did you keep it? She said that in my bed. I said, it's a pure risk, but she had no evidence. I said, there is a bank account which you can open. She didn't want to do, because who will go, who will get the Aadhaar card? So, now, that is the role of all the agencies. That is the role of India Post Payment Bank. That is the role of the bank. That is the role of the academicians. And the role of Investor Education Protection Fund Authority and institutions like IICA. That ask them that, please, you have the cash, go and deposit in the bank. Till you invest in something, you will earn some interest out of it. Why are you keeping cash? So that's very important. We have conducted around 66,000 investor awareness programs. It will be giving some messages and to the investor population. And on 7th, if IICA and other participants were there, when Honorable Finance Minister also said that it's very important now that the retail investors are brought in the market, and retail investors are brought into the focus of the entire economic development. Because we cannot be dependent on FPIs and FIIs as such, and we have to play a role in that, and collectively we should play a role. With this, I'll ask, particularly I'll request Namita and all other experts in the field. I have one question, and I always feel that that question should be, again, IICA may have a role to play here, or like India Post Payment Bank or IPFA. And I always say this, and I believe with this. The most complex instruments which are existing in the market have to be simplified. See, you cannot teach a rural person to talk about an option, to talk about a put. What is the, she is not aware of a share, she is not aware of an equity. So we can talk in the our academic circle or in the rural areas, metropolitan areas, about the equity-linked savings, equities, the debentures, and the balance sheets, liabilities, and assets. But is it percolating down to the vast majority of population? So, along with financial education, time has come to educate them. So literacy, then education, and then asking them to invest. Make it simple and make small videos which should go to rural areas and to say, they understand, all visual, everybody is using a smartphone now, in rural areas also, in semi-urban areas also. Make a small video to say, what is equity? Why equity investment is required? What is a company? Where do you invest? How do you open a bank account to get dividends and get a share? So these jargonized jargons will not democratize the economy. If you have to democratize the economy, you have to make it simple. The political democracy, this is how it works. Because then you are speaking a common man's language. If we speak a language which is alien to the common people, you are not going to bring them into investment fold, other than a simple bank account. So we have to now, in next 25 years, when we are targeting 100th year of, which will be 100th year of our independence in 2047, we should reach that level. We should have that commitment. Let us make the financial world simple. Uh, Jargons be removed, because in the economic times, business standards, these are read in the news in the metropolitan areas by few. In the regional areas where, in the rural areas where the regional languages are there, the small tabloids are sold. There we make this story that this is how you can have a better return. So thank you very much. I have taken a lot of time. I said the esteemed panelists are with us. They will be, in fact, discussing much more about it. I have given some practical insights that what. Thank you very much. Thank you.
Thank you, sir, for setting the context and the idea of simplification, the idea of empowering retail investors and linking it to economic development of the country, and the collaborative approach where all stakeholders come together for this common problem, or rather the common mission, is the key takeaways. They are well noted, sir. So my first question is now to Ms. Shushmita Fukan. She is with us online. Shushmita ji, RBI has been dealing with this issue for a quite long time and playing a leading role. What has been the general experience of the RBI regarding financial education and including inclusion of women, general and women also?
Am I audible?
Yes, ma'am. Please.
Yes. Good afternoon. So, Sri Manoj Pandey, then Professor Naveen, my distinguished co-panelist, Ms. Seema Singh, Ms. Namita, and Dr. Singh. It's indeed a pleasure to be here. I'm sorry I could not be there in person, but this topic is something which is of very, very pertinent, in fact, for the central bank and also for the government, as you all are aware. So it's really a pleasure to be discussing this topic. And I must say that Shri Pandey, he has already set the tone for the discussions, outlining all which is important in this area. So to start with the very basics, I think financial inclusion is increasingly being recognized as a key driver of economic growth and poverty alleviation the world over. So we are very much aware of it. And Shri Sinha also mentioned, like, financial inclusion and literacy is relevant not only for women but for everybody. I think taking a cue from that, I would like to just very briefly list out some of the very important initiatives which RBI, along with the government, has taken for furthering of financial inclusion over the years. Namely, these are the priority sector guidelines, the lead bank scheme, the promotion of self-help groups, then implementation of the business correspondent model, liberalization of the opening of branches, ATMs, and so on, so many, and use of, and in the recent past, the increased use of technology for providing solutions, like the concept of account aggregator, regulatory sandbox, setting up an innovation hub, payment infrastructure development fund. So all these, the list goes on because it's an evolving area, and the solutions are emerging, how we can further financial inclusion while also including financial literacy. So here, as far as government is concerned, the JAM Trinity, the Jan Dhan, Aadhaar and mobile, that has brought about a major shift in the field of financial inclusion. We all are aware. And also the evolution and adoption of technology has led to deepening of financial services. Now, Shri Sinha mentioned about the National Strategy of Financial Inclusion. And this is a 5-year strategy from 2019 to 2024. And along with that, we also have a national strategy for financial education, that is 2020 to 25, NSFE, which is being implemented by the National Center for Financial Education. So these two strategies together, they provide a coordinated approach towards financial inclusion, financial literacy, and consumer protection. So we know that financial inclusion is the need of the hour. We have been doing it for so many years and we are building up on it, but it is increasingly being realized that apart from the supply side measures which we introduce, the demand side also has to be taken care of. The financial literacy consumer protection and grievance redressal, they have become areas of focus for furthering sustainable financial inclusion. So in this regard, the setting up of the National Center for Financial Education by the four regulators, and also implementation of the Center for Financial Literacy project of RBI are very two recent initiatives for furthering of financial literacy. So I'll talk about it more in detail. But I just wanted to, because this is a panel for women-centric initiatives, I thought I'll just, in brief, talk about some of the women-centric initiatives here. Some data points, like according to an IFC report, nearly 20% of all the MSMEs in India are owned by women, out of which 75% rely on informal sources of credit to run their business. So there's a huge untapped potential for offering credit. Then the credit offtake to women in MSME sector by scheduled commercial banks stood at 10.74 for the financial year 2021, while for 2020 it was 10.68. And it is observed that the micro enterprises constitute majority of credit extended by banks to women in the MSME sector, that around 71%. And then we find on the deposit side, on the liability side, there has been substantial progress in opening of bank accounts under the Jan Dhan. We are all aware it's a massive exercise and also for women beneficiaries through this government mandated program. But while for availing of the services, if you recall the Global Findex 2017, it said that while 43% of women with an account reported having made no deposit or withdrawal, for women it was 54%. Then again, the World Bank report on financial inclusion for women-owned micro, small and medium enterprises in India, they pointed out that lack of access to capital is the biggest constraint faced by women owning SMEs in India. So considering the significant role played by women entrepreneurs in advancing economic growth of the country, I feel there's substantial scope for improvement in credit offtake. Now, to deal with this, we have been taking various measures. We know about the SHG bank linkage program in coordination with the Ministry of Rural Development, the DAY NRLM. So here, some changes were enhancing the amount of collateral-free loan under DAY NRLM. Then there's an inbuilt multi-pronged approach to build capacity and skill among the SHGs using information and communication technology. And there's the concept of the self-employment program of the National Urban Livelihoods Mission, which focuses on providing financial assistance through provision of interest subsidy on loans for establishment of individual and group enterprises and the self-help groups. And also the use of credit cards or mudra cards through banks to meet the working capital requirement of micro entrepreneurs, including women. So these are some of the initiatives, few of the initiatives taken in recent past specifically targeted for women. But as Sri Sinha very aptly described, like the supply side measures have to be supplemented by the demand side. Only then these will bear fruit, because if the end users are not aware, if they don't know what all is available for them and what is appropriate for them, then it will come to naught. So that is why financial literacy goes hand in hand with financial inclusion. We have come up with customized literacy content for different target groups, wherein self-help groups are recognized as one target group. And here I would also like to add, under the National Strategy for Financial Education, we have the 5C approach, comprising of content, capacity, a community-led model, communication strategy, and collaboration. So the content part, what Sri Sinha mentioned about, having simplified content, which is easily understandable and accessible, is extremely important. NCFE is actively involved in developing basic financial education content. And here the communication part also comes in, because how you communicate the content and to whom you communicate the content, that is very important. Because like he said, if we go to a villager and talk to him about him or her, about options or derivatives, I think that's a futile exercise. You have to have customized target for the end user in their own context, in their own settings, in the language which they can understand. So here we are working on a Center for Financial Literacy project. This is a tie-up between banks and NGOs, where at the block level, NGOs are imparting financial literacy at the centers. And the idea is that the content is customized to the needs of the customer, of the end user. So then the involvement of the NGO brings in about that customization, because NGOs have representation from the local community, and they train the local community people so that whatever is being imparted is relevant, and usable for the end user. And the outreach, this started off as a pilot project in 80 blocks, and then subsequently it was extended to 20 tribal blocks in 2019. And now we are trying to scale up the entire project scale up the project to the entire country. So this, I think, is my take on initial take on the financial inclusion and literacy efforts. But here again, a word of caution here, because the financial literacy we are imparting, and we are trying to get financial inclusion, we are trying to get more and more people into the fold, but they have to also be sensitized about the safeguards to when they go on a digital mode, what kind of safeguards they need to take, what kind of apps they are using. So telling them about it, making them aware about the pitfalls or the benefits, first of all, the benefits and the caution to be taken is extremely important. And together, so then, and how do we build trust into the system? That will have to be through an effective grievance redressal mechanism. So that is for that, towards that end, RBI has taken several measures of having a site for portal-based complaint mechanism, having an integrated ombudsman scheme, having internal ombudsman in bank branches. So the entire trinity of financial inclusion, financial literacy, and customer protection, I think they have to come together if we want to achieve our vision of financial inclusion for all. I think that's all from my side right now. Thank you.
Thanks, Shushmita ji. Coming to Seema Singh ji from India Post Payment Bank. Ma'am, IPPB is the world's largest financial inclusion initiative. I think no other institution has the reach, depth, and trust, which is very important, that IPPB has. So how has been the journey of IPPB towards the financial inclusion so far, and what are the plans for the future?
So thank you, Naveen. Thank you so much. And it's an honor to be part of the panel where we have Sushmita ma'am, Manoj sir, Seema ma'am, and Namita. IPPB has been set up with a dream of our Honorable Prime Minister for having the most affordable, trustable, and accessible banking system to the rural population. So this mission was very difficult, but has been achieved. In this process, what we did, the mission was to convert every rural postman, which is known as Gramin Dak Sevak, to give banking services to the last mile through his handset or maybe whatever we could provide him with. So the challenge was to convert a postman into a banker, a person who's been traditionally delivering dark parcels or maybe collecting money orders, delivering money orders, but now giving banking services in compliance with the regulations of RBI and the ministry. So a lot of effort went on. What we did was we trained around 5,000 master trainers, trained them on the compliance and the banking products. These 5,000 people in turn went and then to the different parts of the country, and then they educated, trained around 2,90,000 postmen and Gramin Dak Sevaks. So major population was Gramin Dak Sevaks, and some were postmen who were working in urban areas. So the target audience has always been, as Sir said, the people in the rural areas who understand simple language. So the training content, even for the Gramin Dak Sevaks, were made in regional languages. Our content was made in 13 regional languages so that they understand what we are wanting to say. And then the app, which has been made by the bank for the customers as well as for the Gramin Dak Sevaks, they are all in 13 regional languages. So it becomes an extremely easy and simplified way for a person to understand how to transact. first is to be included in the financial services and then start transacting. The basic purpose of the bank was to enable people in the rural areas not to use the middlemen for their banking services, but be self-reliant. Initially, we were helping them on an assisted mode. The Gramin Dak Sevak would go and give them a doorstep service, make them literate on how to use the app, and then gradually people have started using the app on their own. So the mission is to enable people to transact. Sir was talking about derivatives, and so first is we have to make them understand that they need a banking system. They have to come in the folds of banking system and be out of the bounds of middlemen and the money lenders. So this whole initiative has been a great experience. We've been leveraging on the huge network of Department of Post, which has around 1,55,000 post offices. Out of 1,55,000 post offices, 1,36,000 are already delivering. So imagine, sir, that 1,36,000 post offices are giving the banking services which are on core banking, and 2 lakh, if not all, 2 lakh postmen and Grami Dak Sevaks are across the country delivering the banking services who are on core banking, and of course my 650 branches which are there. So effectively almost 4 lakh outlets are there which are on core banking services. The reach has been enormous, but the bringing people on fold of the banking is gradually improving. Especially at the time of pandemic, I'm surprised at that time when we enabled our Gramin Dak Sevas to go to the doorstep and give banking services. Every day we were trying to give people, they could withdraw money through an Aadhaar-enabled payment system or remit their money to the people who were, let's say the child is studying in a college outside, or maybe a migrant labor is stuck somewhere and has to send the money. At that time, bank came so handy and people opened the account. We were opening 1 lakh accounts a day at that time because that was the time when they actually needed money. And the bank came forward and bank became popular at that time. The staff of Department of Post did an enormous job of educating people at that time, delivering the doorstep services, remittances were made, payments were made, all that was made, and it is improving with every passing day. Way forward, we want all 1,55,000 post offices to be enabling, which is going to happen very soon. More than that, we want entire rural population to come into the folds of banking. So this is the plan, and we will definitely achieve that.
Thank you, Seemaji. Definitely a great case study and a lot of learnings from the IPPB. Now, ma'am, Professor Seema Singh ji, as an academician and a researcher, you have done a lot of research on women empowerment and related dimensions, including financial inclusion. In 2020, there was a paper published, Women Empowerment in India, a critical analysis by you. And there was another study done by you on financial inclusion of women in urban slums, ma'am. So can you share a gist of major findings of the two studies, starting with the idea of women empowerment and then maybe the reality of financial inclusion of poor women?
Sir, for inviting me for this panel. And this is a kind of out of the world kind of experience, because generally we participate in a panel discussion of academicians. But here I am just talking to or listening to the people for whom we are writing something or reading somewhere from any journal or magazine. So it's a great experience. And actually, women empowerment started in 1975 when UN first World Women Conference in Mexico. It was organized by UN. And then next decade, 75 to 85 was decade for women. And then same time in India also 5th five-year plan was going on. And then just to in accordance with the UN initiatives. Government of India also took many initiatives, and then it has throughout the year, means 25 years in that century, and now here almost. So it is almost golden jubilee kind of thing. So 50 years, and then we are discussing this. Even the last every year, UN organizes UN Commission, UN United Nations Commission on Status of Women, and in 65 United Nations Commission on the Status of Women, women leadership, economic empowerment, economic inclusion, these kind of things, these words are recurring, coming frequently there. So I agree with sir that lot of water has been flown since then 75, and women are empowered. But even now, there must be some part or some people or some significant number, people in significant number who may not come in the fold, and that's why so much attention is being given. And then when you go to at the ground level, so before that, I like to just to support sir's view. I like to quote National Family Health Survey, NFHS 5 2019-21 findings. And the question was 3 decisions taken in household, and 91% of urban women and 87.7% of the rural women said yes, they have taken 3 decisions in the household activity. So they are empowered. Husbands and family, they are asking for their viewpoint also. But at the same time, in the same survey, 80.9% of the urban women and 77.4% of the rural women said that they have bank account. And then you said about my work, means the second one was done by my PhD scholar. So we have also found there that opening an account is another issue, and then using it is other issue. And the other issue, the second one, has to be taken care of more. Means the people who are going to take decision in future, they are in front of me. So I like to advise, because these are the core issue where you have to concentrate, because they have, even my maid servant, I asked, since I was coming today, so I asked, when you last opened your account or transacted account? 6 months ago, because they are not operating, they are not putting money, and then they are not, just it is saving account, it is not taking loan or something else. So this is the issue, because in the financial literacy, you teach people, these are the issues, but what happens, because one study which I have done in 21, that is very important. I'll send you the report also, because you are not aware of it. So I took a fund from Graduate Women International, and then I organized 10 programs for people from the lower segment of society, and I wanted to empower them, how to empower them. So education, 10 years of education, and then this is the second issue. So first, about my experience of that project. So even and then that was the COVID era. So I took the project before COVID, and there was no money for bringing participants from their house. So I have to take help from a NGO, and she was kind enough to manage everything, because I don't have money for coming. Bringing participants from their household, and then so they were spending money. So at that time, the issue is important for them, but they will expect that the NGO will take them from their house, and they will be there for the whole day, and the NGO will provide everything, tea and lunch, and then, because at that point of time they don't require, but whenever they require, they need help. And the same experience is mine with my student, because for 25% marks, we have internal marking. So I asked my like demonetization. So I asked my student to teach e-money to any people from the lower segment of society. So my student, then whenever they will go, they may not have time. So that is also very right, because they are also human beings. They have their own life, their own demand, own everything. So we can't dictate them. So when again such important persons are in front of me, I like to share my idea that one point giving some information at one point of time is another issue, but continuous, there should be some platform where they can go and they can ask what is the problem they have. So that is very important. And that is because many people may not like to go to bank, because entering in that kind of circumstances, talking to the bank officials, asking for the what are the financial things are available to them, products are available for them, what is else available. So they will ask one or two lines, and you can't blame bank officials also. They are work pressed, so they will not also, they can't entertain only one customer or two customers for the 1 hour or 2 hours. So that is a problem. That is a problem for with the teachers also. My students are for certain period, 1 semester. They have exams, they have mid semester, end semester. So they may not be available anytime. Any person from the slum, nearby slum, comes and then asks question, because the student may be in the class. The teacher also may be in the class, or may be engaged with some of the issues. So their self-help group or NGO comes in handy, because I also took help of NGO, because NGO has connect with the people. Because I just thought of conducting a second round of study with the same people. So then I'll contact the NGO, because I don't know people. And then all those people who come directly with me, so they are not connected. It's difficult to connect with them again. So that is a connecting point for us. And then another and then some of the barriers, which because the study, as I mentioned, conducted in Patna and Ludhiana, some of the barriers are like, and then Madam said most probably that she said, Madam from RBI, that customer care kind of thing, because one of the barrier was they are not cooperating. So she may have gone once or twice and may not have got the answer which she may be looking for, and then that was one of the issue. And then another, she may not have the smartphone. She may not have used internet. So I have seen nowadays we have the Tell Me Google, so you can ask question, because this I will. Then that project I was started before COVID, so that was also conducted in Delhi and Patna. So in Patna, I met her, and that she was not a very lower segment of society, lower middle level, and she said that she started a boutique, and she took loan from the market, and then the boutique is not providing enough money so that she can give up, so return back money to the lenders. And then that I said that you are dealing with the boutiques, so then you need to be very well dressed, because why people will purchase from you if you are not looking beautiful and attractive? So you should be in a very. So she said that whenever I wear a new dress, then my neighbor will start saying that you have money for purchasing clothes, but you have not money to return back to us. So, and she was not aware of mudra loan. And so, and most means interesting is not the right word. Interesting maybe for the researcher, but for a human being, she was educated also. Lower middle class means maybe something some education also, B or something, but she was not aware of mudra. So Nowadays we have Google ask me, then you can ask from the Google where I can take, from where I can take Google loan and everything. But she may not have that kind of phone also. So access of internet, access of that kind of phone is also a barrier. And then, time constant is also one. So the rural area, ma'am is looking after. So because the rural area, I have seen that kind of problem because if they have to spend whole day for talking to people and getting some loan to bank, so they will not avoid going to bank and ask. So that is one of. Okay, that's a minute, ma'am.
Add one thing what ma'am said is, when you said bank, people cannot go to the bank, I know, especially the people who are working on daily wages cannot go to. So that is why India Post Payments Bank, where the bank comes to your doorstep.
Yeah.
So bank comes to the doorstep to the people who cannot step out of the houses. Bank comes to the people who cannot leave their place of work, may lose half day's wages to go to a bank. Or maybe to the senior citizens who are sitting at home and are unable to step out of the house to go to the banks. So there comes India Post Payments Bank to help you out.
That's very good initiative, because my finding was from the starting of that before that starting of that bank. And just a minute, last two sentences, because that is one of my opportunities. So I want to say everything which I want to convey to the, because I'll speak about the previous panel. CSR is for how the corporate sector is looking to CSR, or you are looking at CSR. As a researcher, I'm looking at the money. 2% of money, 2% of their profit is coming as money, and that is a very important source of income for many. I know many corporate sector are giving many good training to the people, because I wrote a paper for a 62nd conference of ISLE in IIT Roorkee, and then I presented there, and I ran a correlation and regression between women employed in micro sector and CSR expenditure state-wise, and it's a very positive relation between correlation and regression also. So that is very important, and I am looking at ESG as a one step ahead of CSR, because CSR that was not quantitatively you can measure, but here in ESG, as I've heard and known it, you can measure it. Thank you.
Thank you, ma'am. So coming to Namita. Namita, you have worked across geographies for more than 3 decades. So what are your thoughts on the global perspective of financial inclusion and education? And do we have any lessons that India can draw from other countries?
Thank you very much. I think much has been said, and financial inclusion, it is a globally recognized challenge. It's no different from what we are facing in India. In fact, one of the World Bank surveys says that 31% of the world population is unbanked. And the recent RBI Financial Inclusion Index shows that about 190 million people are unbanked. India is the second largest unbanked population, and out of that 60% is women. So these numbers are really starking. At the same time, from a banker's lens, it's very important to understand something. So we have a very strong national strategy for financial inclusion by RBI, which mandates banks to undertake financial inclusion or financial literacy. The JAM program, the Janadhan Aadhaar and Mobile program, I mean, that sits on the Guinness Book of World Records, right? For maximum over 1.8 crore bank accounts in a week. So those are the kind of numbers. However, 14% of these accounts still remain dormant. So, what Manojji said or what Seema said, it's not about opening bank accounts, but it is about providing financial products and services that at affordable costs. That's another important thing. And to the unbanked population, depending on what is their need. So it's not about financial institutions coming up with products, but it also has to be customer centric, right? And I think one very important factor here that I want to mention is that the disconnect is largely because one is, let's understand, banks are commercial entities. They're looking to make profits, right? And therefore, they would want to invest in business opportunities, right? On the other side, the challenges as far as financial inclusion are concerned, lack of, one is literacy, which is the biggest aspect, right? Absence of a credit history, missing formal documentation, uh, or any kind of identification also for that matter. Inadequate education, lack of assets like a land or income proof to even be able to access products that are available, right? If I have to take a loan, but if I don't have any collateral, what would one do? Who's going to give me a loan? And all these make up not only in India, but we've seen in markets like Chile, we've seen in markets like Zimbabwe, Bangladesh. I mean, these are the kind of things that are very, very rampant there. On the other side, I think, it's very important to note that RBI mandates all banks to deploy 40% of their lending towards PSL, right? And women form a big part of this lending that happens. There are microfinance agencies that are doing very well in the market. Of course, there's a lot of need to do more with the recent regulations that came out in April 2022, which are more, this has come out by RBI for regulated entities. To be more customer centric. I think it also triggers a kind of a level playing field, because what we've seen is that banks often, traditional banking is often facing challenges from nimble-footed fintechs that are today emerging in the market. So strong partnerships there, I think, are very, very important. But what I want to say here is, if you just zoom out for a minute and look at the larger picture, right? I mean, if we have to look at the SDGs, the Sustainable Development Goals, financial inclusion meets 7 of the SDGs out of the 17, right? And eliminating poverty, which is the first objective, the #1 SDG, and also financial inclusion objectives. I think there, innovating on financial products that are, again, that have accessibility, affordability, that especially for women is very important. We've seen that in microfinance, borrowers are women, and the rate of default is only 2.6%. And this is what studies have shown, right? So there are a lot of opportunities that are sitting there. And I want to take an example of, in Brazil, there is Bolsa Familia. It's a conditional social transfer program that they run there, where, they were able to cut transaction costs from 15% to 3%. Between 2008 and 2005 by bundling all the benefits onto one electronic platform. It was a payment card basically that it provided, and which contributed to almost 12 to 18% reduction in the poverty rates that they have there. So we really need those kind of, and one of my experiences, in my former role as a banker, we worked on a joint scheme that was delivered by the bank, the state government of Maharashtra, on the rural development program. It was an app that was launched. This was entirely to digitize the sanitary napkin subsidy distribution process and the buying process. And, under this particular scheme, the self-help groups that are part of this chain, supply chain or value chain, they were able to access this facility and touch upon almost over 18 million women and school girls and children. It revolutionized the health segment as far as, the whole process was concerned. And what did it fix? Leakages and misuse of the subsidy, that was eliminated. The taboo that menstrual hygiene, one that was addressed, which is normally not addressing children, girls don't go to school because of that, and so on and so forth. And school attendance of young girls that went up. So what we did was, it was an app where there were self-help groups, there were government-approved manufacturers of the sanitary napkins, and the minute the self-help groups would place an order, the subsidy would kick in, so no leakages. And that's how it benefited so many people. So I think, we need to look at more of such products, blended finance, these kind of innovative products, and that is going to become a business case. So it has to also become somewhere a business case. I know it's a social issue and it's very harsh to speak so commercially, but ultimately there is a commercial underlining driver, right, for more and more financial institutions to come into the fore. Thank you.
Thanks, Namita. So coming back to Shushmita ji, RBI has launched the Financial Inclusion Index, which is very innovative, and it just doesn't restricts to the quantitative dimensions, but also adds the qualitative dimensions, the quality of financial inclusion. Can you please share something about the index and then some major points or learnings from that?
Thank you, Dr. Naveen. So this creation of the FI index, the idea is to measure the extent of financial inclusion in the country. So this is a collaborative effort between the four financial sector regulators and the government of India, based on inputs from all the relevant stakeholders. So this index, it is a multidimensional composite financial inclusion index, and comprises of three sub-indices: FI access, FI usage, and FI quality. So if you look at the literature, all indexes generally talk about access and usage part of FI. But here an innovation has been, we've tried to capture to some extent the qualitative part of the FI, which, as we discussed earlier, the demand side measuring that is very important if you want to chart the way forward. So this is comprised of 97 indicators which quantify the extent of financial inclusion, and it is basically responsive. These indicators are responsive to availability, the ease of access, usage, unequal distribution and deficiency in services, financial literacy, and consumer protection under the quality aspect. So on in a scale of 0 to 100, the annual FI index with three sub-indices of access, usage, and quality for 2021, it stood at 53.9. So that was the measure arrived at. And this measure was driven largely by access sub-index, which stood at 73.3, reflecting substantial progress so far in creating financial infrastructure in the country through combined efforts of all the stakeholders. Like we have been discussing, like we have traversed a long distance over the years. We have come a long way. So this reflects in the access part, but of course there's a long way still to go. Like, and where do we focus? Which are the areas we focus for this? That is the indication can be taken from the FI index. So we need to work on the usage and the quality aspect of the FI going forward, building on the access part. So the three indicators, access, usage, and quality, have individual weightages of 35, 45, and 20% respectively in the entire index. Idea was around 1/3 of the weights. These weights have been determined to make the index more forward-looking and with higher weightage for the deepening of the financial inclusion, comprising of the usage and quality. And these indicators, their optimum values, and the respective weights have been decided in consultation with all the regulators and the government, keeping in mind the relevance of the particular indicator in furthering FI. So broadly, 1/3 of the FI index has been assigned to access, where most of the initiatives in the past had been undertaken, and which reflects the extent of supply side financial infrastructure made available, while 2/3 of the weights has been assigned to deepening aspect, that usage and quality. And each of these three sub-indices are further composed of distinct set of dimensions based on non-overlapping set of indicators. Here, access sub-index is divided into 4 dimensions: banking, digital, pension, and insurance, to capture the infrastructure created in each of these areas and the efforts made on the supply side of financial inclusion, such as like the availability of physical and digital infrastructure, and measures for making basic products and services available for the excluded segment. This has around 26 indicators. Usage sub-index is divided into 5 dimensions: savings and investment, credit, digital, insurance, and pension, having around 52 indicators. It is like a demand side measure and reflects the extent of active usage of financial infrastructure by way of savings, investment, insurance, availing of credit, and remittance facility. And the quality sub-index has 3 dimensions: financial literacy, consumer protection, and inequality. This has around 19 indicators, and these seek to capture the efforts undertaken by the stakeholders to make the citizens aware of appropriate financial services available, and then safe ways of using them, and making them aware of their rights, such as and also to overcome the psychological barriers. It also tries to capture the effectiveness of the grievance redressal mechanism and account for uneven distribution of certain indicators of financial access and usage. So the idea behind this index is like to capture how much we have traveled thus far to arrive at a value between 0 to 100, and then going forward, which are the areas which need focus? So as you can see, the areas of usage and the quality aspect are the areas where we need to focus on going forward, building on the access in the infrastructure. Thank you.
Thank you. We are running out of time, so one quick question to one of the panelists, and then we can have one or two questions from the audience. Professor Seema ji, as Manoj sir mentioned in the initial remarks about the spouse effect, that generally women tend to shift this responsibility of money decisions, investment decisions to their spouses and other people. So how can this spouse effect be corrected, especially among working women?
Actually, the family, the social life is patriarchal, and women are have remained for years in the household. And nowadays, she's studying and she's working also. But somehow, and the boys are going out and they're interacting with the world, and they know, so they are more confident. So it is a matter of confidence rather than anything else. So it will come under cognitive skills, where you are self-esteem, self-confidence. For that, in my program, one of the session was on, I invited a person, expert from World Bank, because generally now even for us, World Bank is a very big thing, and no, we cannot go there, and they plan something else or something more bigger, and they were just my participants were women from the lowest segment of society. So interacting with the women speaker from World Bank was a big thing. So it is a matter of time. So just start working in that direction, and time will come, and when the century 100th year of the independence, and then I think, because you see even the rural girls, they're so nowadays they are becoming demanding, asking for things, their rights. So world is changing, India is changing, and the world is eventually also changing. Yeah.
Thanks, ma'am. I think you're right. Things will improve with time. The social settings are improving.
Can I come in here? Can I come in here?
Yes, ma'am. Shushmita, ma'am, you want to add something?
I just wanted to add, I think also going forward, having the need to customize, having customized products for women, I think that is also something that the financial institutions should look at, which because the entrepreneurial skills, they are definitely there, but there are other barriers like lack of adequate opportunities, not having bank accounts in their name, lack of direct legal ownership of property, all those are there. But once those can be addressed, I think having products targeted for women by financial institutions, I think that is also an important aspect to capture, bringing more women into the fold.
Thank you, ma'am. Point well taken. So having customized products for women. So now we can have one or two questions from the audience. Any question? Okay. So just to conclude, friends, it was a wonderful session, and we had a lot of insights. While the session chair set the context and talk about the collaborative approach to the common problem or the common mission now, and highlighting the importance of investor education or financial education to improve retail participation of investors in the financial markets, which will augment the economic development of the country, and the 5 trillion economy that we are talking about can be done through financial education. Simplification was, I think, a great idea what sir talked about. Shushmita ji talked about the national strategies for both financial literacy and financial inclusion, which are in place. You briefed us about the balanced approach that we need to take forward, the supply side and the demand side both approach. Customized content, customized product for women, and of course you highlighted about the index. Seema Singh ji from IPPB, I think she highlighted how IPPB is a perfect example of technology, customization or localization, and simplification. So what we are talking about. Namita ji, uh, she put forward the dimensions of affordability, which was a very nice, and the innovation and blended product, which was further substantiated by Shushmita ji also having us customized things. And most importantly, the commercial aspect or the viability for other stakeholders, the related stakeholders, because it has to be, the ecosystem has to be developed as such. We cannot just focus, have a lopsided approach. And lastly, Professor Seema Singh ji provided about the research findings from the things, the barriers which are there available on the grounds, and the very important part of the continuity of financial inclusion or financial education. It cannot be a one-point thing, one-time activity. It has to be, there has to be a continuity of financial education. So with this, friends, we come to the end of this panel session. Now I would like to request my fellow colleagues. Yes, please.
Yes, sir. See, I have seen in recent LIC IPO, they started offering the LIC shares to the existing policyholders. So the majority of the policyholders who I know from our villages and all, they all are illiterates. So I got a call one day asking that they have a policy from last 9 years, so that they would like to avail the LIC IPO. Then I asked that, have you have any knowledge on that? It's completely illiterate, no knowledge, but they heard somewhere that LIC is giving a discount to the policyholder. So ultimately, they opened a demat account, applied and got the shares also. So in my district, it's very Mofussil in Andhra Pradesh. So I have seen so many such policyholders have availed LIC IPO, which is very phenomenal for me because they never invested in share market, they don't have any idea. But they found a link that way they are the LIC policyholders. So like that for investor education, can we do the same thing with the bank account holders? Because what they require the illiterates to come to the financial inclusion that I understood is, they need some link. If I go and tell him that you invest in LIC directly, they don't. But if I say that you are a policy holder, which you are already doing, so that now that another advantage for you to get something out of it, they're giving discount. So they got excited. So the number of demat accounts have increased double. Like I have spoken to Zerodha and all these DPs also, they were telling, sir, suddenly there's a surge. And they can see from their Aadhaar cards that they're receiving it when the account is opening. Most of them are illiterates. They're not even degree holders. But the number of demat accounts suddenly has gone up. So for IEPFs, I always feel that to investor education, if really want it to be spread, we should find some common link where we can connect them to the subject. So I feel that the banks have a better role to play in a way because they go to door to door. I think IPBB is the best option because they go to door to door. So this would be an extra element that we can add so that this IEPF mandate we can able to spread it better. That's what my personal opinion.
So we have already connected with IPBB.
Yes.
There is an MOU with us.
Yes.
So we are partnering with
Yes.
them.
So we have partnered with IEPFA, and till now, more than 4,000 camps have already been conducted.
Yeah.
People are being educated on a lot of financial products, and almost 5 lakh people have already been educated, out of which 40% were women.
Right.
So things are moving on,
Yes, yes.
and I think very soon we'll see a lot of
So
change.
this would be a very better channel.
Thank you.
Thank you. So now I would like to request my colleague, Dr. Garima Dadej, to felicitate Shri Manoj Pandey, sir. Please. I'll also request Lataji to felicitate Namitaji. Now I request Dr. Abhay Yadav to please come and felicitate Seema Singh ji from IPPB. We have two panelists from the same name. Yes.
Very common name.
Very common. I'll request Dr. Paila to please come and join for felicitating Professor Seema Singh. Friends, we will be preparing a summary of discussion, what we have done in the panel discussion, which we'll share with all the panelists and we'll also put up on the website for major findings. Thank you. Thank you, everyone. Apologies, Shushmita ji, if you are there virtually. A heartfelt thanks and gratitude to you for being there, and look forward to meet you soon. Thank you.
Thank you to all the panelists. Now we are into the validity session.